Okay, I want to go over one of my trades, actually two of my trades I took this week. Had kind of a strange week. I started out the week really good, I was up really quite huge, very early on in the week, and then by a couple days later, I was actually down quite a bit. And I ended up the week up about 20 pips, which is basically break even. So I really had a break even week, which I'm okay with considering how much I was down before. But I want to go over one of the trades that actually took me through kind of a tumultuous week. And this is the pound Canadian dollar. And what I'm looking at here is I guess you would consider this a counter trend trade, but let me pop over to the daily just to show you. I've marked it up a little bit to show you what I'm looking at. And what I normally do is first scan for the FOSI. This is a moving average, and this is an RSI and a moving average of the RSI. I'm looking for those to cross. I like to see those cross around an extreme. And if you get a pair like this that's really oscillating, you see how this thing is just oscillating up and down like this. It's oscillating around this 150-day moving average. It's giving you these big swings. It's been doing this for quite some time. You can really play this up against here. You've got some resistance right around, what is this, 164, a big round number there. So you've got these points here where price has been rejected from these levels over and over again. So you can put some confidence in your RSI when that starts to weaken, or when it starts to move away from these big round numbers or these resistance points. You've got some confluence there, and you've potentially got a pretty decent trade. And what I've done here is I've marked this cross with this vertical line, this red vertical line, so you can see it on the 4-hour chart. I use the 4-hour chart as a trigger, but you see right here also we've got an inside bar. Got this big run up here, inside bar there, and then a break of that inside bar, cross of the FOSI down here, weakening of the RSI. Popping over to, and this red line here is my, let's pop over to the 4-hour, we'll show you. This green line is my entry point right here. This is where I put my sell stop, and this red line is where I put my stop loss. And forget from this point moving forward, because this is the day, this big huge down candle. This is the 3rd, I believe, yes, the 3rd of October. And this is the day that I took the trade. Comes down. I had the sell stop right here at the last low. Is right at this low here. Put my stop loss right there, and as you can see, it came down and got filled. I felt pretty good about it. It closed below this big round number, huge bearish bar. I thought this has got lots of momentum. Let me check something real quick. It's about right there, and it also looked like it may have had some space to run here, which it ultimately did. It was just a matter of timing. But you see what happened here. It came down, made a low, broke out of this channel by a couple of pips, filled my position, but immediately, just the next bar, this thing runs up and takes me out at about an 80 pip loss. So that took me down. I trade 2 lots at a time. Took me down quite a bit, and it really kind of it made me think. What did I do? What did I do wrong? And sometimes it's just nothing that you did wrong. But then I started thinking, this was a trade that was primarily based on the FOSI. It was primarily based on the daily, what I saw on the FOSI, and I didn't use any of my filters that I normally use. For a trade like this, I normally use a cross of the moving average. I've got here, this is a, what is this, an 8-period moving average, I believe, or 6-period moving average, and this is a 25-period moving average. Cross of the moving average. I've been testing out this indicator. You've probably seen it on my videos, but it's something that I threw on there. I find these things on the internet, and I throw the indicators up there to just kind of look at them and test them out for a little while and see how they do. Primarily, what I'm looking for when I do that is looking for types of filters that I can use that might help me when I'm making my entries. This is a pretty good one, I think. I like it, but my friend pointed out that if you notice the cross of the midlines, they really coincide with the cross of the 6 and the 25-period moving average. They really closely follow that. So if you're using the moving average cross as a filter, the Damiani trend indicator is really overkill there, because it really coincides closely with these crosses. So I guess you could take the moving averages off and just use the Damiani, or you could use the Damiani, or you could use the moving averages in the place of it. But the rules of my system are this: you cross of the moving averages, and then play the break of the Donchian channel, and that's eventually what came about. Let me flip over to another chart here, and this is a chart of the second trade that I took. So this was the first trade, which was a loser. This is the first one that was a loser. You see I've got an entry here and a stop out here. What this pair eventually wound up doing was moving back up to this level, move back up above 163, and right here it came to the top of the upper bands of the Donchian channel and formed the beautiful pin bar right there. And that's a great looking pin bar. And you could actually, if you're a price action trader, you could have put a sell stop right underneath the round number and really profited from this trade. What I did was I went ahead and put a sell stop once again right at the bottom of the Donchian channel, and this is where I got filled on this trade. This is where the trade took me all the way down to 159. I'm going to measure that out. I didn't make this because of course I didn't exit the trade right at the low. That's 240 pips. What wound up happening was right below this round number I tried to compound the trade, so I put on a second lot, moving my stop down on the first pair, or on the first unit, to break even, and then placing my stop lot for the second unit right at the entry price of the first unit. So I'm in it here, I'm in it here, I'm expecting it to continue down. We've got this huge outside bearish bar here. I'm hoping to see this thing continue, and what does it do? It bounces right at this round number 160. Bounces here, forms an inside bar. On the formation of this inside bar, you gotta remember I have taken a pretty decent loss at this point, and I'm seeing this thing kind of stop right here at this level. I'm looking at this congestion over here, and I'm wondering, is it really going to make it past 159 at this point? I've got some 95 pips in the trade, and I am only a few pips from the entry point on my second unit that I've put on. So at this point I just closed out my trade. So the total pips I got, 105 pips I got on this trade. Remember, I lost 80 pips over here. I made that money back and a little bit more on this trade over here, and this is where it stands. And after I closed out this trade, I was really glad that I did close it out, simply because where it went to after that, it did wind up going above the round number. It wound up, it would have been a losing trade for me ultimately, and you see here the moving averages are already starting to converge. It looks like they're going to cross again. In fact, this looks like it might be turning into a long trade potentially. So that was my trade in the pound and Canadian dollar. Wound up being kind of a weird week, but I'm kind of glad I ended it on a break even, but that's kind of the way the market takes you sometimes. But anyway, that's my pound and Canadian dollar trade.